Doris. I'm here to show you about market updates. Today, my account, United Natural Gas made a loss of $40 and SQQ made a gain of $651. Right now, the net asset of my account is $66,849.48. Today, the market generally closed lower. Dow Jones Industrial Average closed down 0.38%, Nasdaq closed down 0.18%, and S&P 500 closed down 0.20%. The industries closed mixed. Semiconductors closed down with a loss of more than 2%, and the internet content closed up with a gain of 1.73%. $1.5 trillion in market money is drying up, and high interest rates are crushing junk businesses. The flow of money that financed the world's riskiest companies during the period of low interest rate and grew into the mortgage-backed bond market. About $1.5 trillion is drying up as sharp rate hikes create tougher lending conditions and uncertainty. The pace of issuance of CLOs, which bundle loans from weakest companies and repackage them for sale, has stalled. Professional asset managers generated more than $500 billion worth of CLOs in 2021, a year of massive monetary stimulus following the pandemic. According to JP Morgan, nearly $69 billion of companies were issued or refinanced in the first half of the year, down 41% from the same period in 2022. According to S&P Global Rating, these tools tend to be popular with hedge funds, issuers, and asset managers when borrowing costs are low and investors are looking for yield, accounting for up to 60% of junk loans demand rated B or below. But just as companies whose bonds are considered junk are facing massive refinancing needs in the coming years, the market has plummeted. Global interest rate rose sharply in decades, and the expected global recession, combined with fewer new CLOs supporting junk debt borrowers, could be a toxic mixture that could push such businesses in trouble. Looking ahead, the demand for bonds issued for these instruments will drop substantially, with Bank of America credit strategist Neha Koda noting that the default rate could be higher. Although currently low, the debt default rate are rising. The restructuring of French retailer Casino and the bankruptcy of U.S. retailer Bed Bath & Beyond exposed cracks in business models that were previously untouched by ample monetary supply and low interest rates, analysts said. S&P Global estimates that more than 4% of U.S. businesses and nearly 4% of European businesses will default by March 2024. It added that the companies with weak cash flows, whose debt is considered junk, have average interest rate on their floating rate debt be at 13-year high. S&P expects that U.S. companies will be speculative debt ratings that dominate the global CLO bond pool will need to refinance about $354 billion in debt by the end of 2024, and then $813 billion in 2025 to 2026. When packaging CLOs, managers of these instruments use loans such as security for bonds of different prices and levels of safety. Investors in the safest portion of the bond receive the lowest returns, while the riskiest receive additional cash flow. S&P estimates that the CLO equity investor will be able to earn an annualized return of 15% by 2022. The deal price will now only offer a return of 7%. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.